guys, simply put, I do not use moving averages. I do not use loads of indicators on my chart to trade with. And I'm going to talk about that today because a good friend of mine over the last few weeks, he just lost a bunch of money in the market trading using moving averages. And now he has been trading for some time. And we're going to talk about why I don't use them, as well as, probably what got him into some trouble himself and some things that I talked about to him, kind of giving him some advice because he understands or knows the way that I trade. So we're going to talk about those things. So just kind of sit tight, watch the intro, and we'll jump right into today's video. So yes, this friend of mine lost money last few weeks. Not sure by coincidence or not. But he is more so a support and resistance style trader. And he uses simply a 50-period moving average, okay? Now I have this yellow line on my chart here, which is the VWAP. A lot of people ask about that. It's not a moving average, it's not an EMA or SMA. Simply, it's the VWAP, the volume weighted average price indicator. I don't place a lot of emphasis on it. I really don't use it at all in my trading. It's just, I don't know, maybe it's just some extra decor I have on my chart. But outside of that, I mean, really, I just use the volume profile because volume is extremely important to me. Volume gauges or shows me in the market where a lot of transactions took place at, in a sense. And I have a certain style, a certain way I actually incorporate the volume profile into my trading around supply and demand. So if you want to know more about that, I'll recommend going back and watch some of the videos on the channel, pretty much that are in captioned or have the title or word in the title, volume profile. So search that on the channel and you'll find some videos about how I use volume profile. But yeah, simply put, losing a bunch of money in the market. This good friend of mine, the last few weeks, he's been scratching his head. He's been trying to figure out what's going on. And it's one thing I always say, sometimes we got to kind of go back to the drawing board and kind of tweak our strategy a little bit because, the market's always evolving. But simply put, I trade supply and demand, and I don't use any moving averages. Can they aid you or give you some sense of direction in the market? I would say direction. Maybe if price is pulling back to a certain level or area that you're looking for price to pull back to, and maybe the market's moving to the downside, it's pulling back, and then it's bumping up against the SMA or EMA, whatever the case is, at a area that you're looking to, that you have interest in, and it falls suit with your strategy. Maybe that's the way you trade it. But simply put, he was using it to trade support and resistance. And you guys know I don't trade support and resistance. I'm more so a supply and demand style trader. A lot of people kind of get the two confused. There is a difference there. I said this in a video or two ago where support and resistance is basically we'll talk about that right quick. Price kind of doing this number here, breaking to the upside, and then breaking higher, whatever the case is. And when prices break into the, pushing up, pulling back, and breaking higher, when price pulls back right here, what I call the neck or the head of a swing to the upside here, that is support, okay? And then again, it pulls back. I should have drew this a little better. Let's just draw this a little better right here. Where's the arrow at? We'll draw a little better here. So price pulls back right here, breaks higher, and then where it pulls back to the head or neck of a swing again. That is basically price breaking structure to the upside. Take it, as it moves up, pulls back, makes a lower, a higher low here. Then it breaks structure, breaks through resistance, breaks up, pulls back, breaks through structure here. Pulls back to resistance. That's basically what I call break and retest. Price pulling back to an area of support or resistance. In this case, it's pulling back to support. If it was making a move to the downside, then it would be pulling back to resistance. So price, pushing down like this, pulling back, making a lower, a lower high, and then pushing down, and then price pulls back right here to what I call the bottom end of a swing now, which would be considered support now, okay? So with all things said like that, I'm not a support resistance style trader. Demand or supply is going to be the area tucked back within the swing where there's aggressive selling or aggressive buying to the upside. My area of interest is going to be right here. Price pulls back, demand down here. Price pulls back, what is aggressive selling? Supply right here. So I'm not trading, the break and retest back to it, right to the bottom end of a level with a support at, or break and retest, price pulling back right to the neck or bottom end, the neck or head of an area of support. That's not the way I trade. That's the way he pretty much trades, and he does use, a 50 period SMA, which is a simple moving average. So if price pulls back, say for instance to right here, support right here, and you got the SMA kind of doing this number right here. Price pulls back, it touches or meets up against or butts up against the area of support here. He's looking to go long. Okay, if price pulls back, pretty much, the SMA is curving around like this. Price pulls back, it butts up against the SMA, it hits an area of support here, and it rejects. He's looking to go long. Same thing if prices, if the SMA is moving to the downside like it was right here. Now this right here is a 50 period SMA, and I put this on my chart for example because I want to show you that, to me, if you're going to use some type of EMA or SMA, I'm not telling anyone how to actually trade, but if it was me trading and looking for I'm looking for pullbacks to an area or retracements to an area of supply and demand where there's, aggressive buying or selling. And I see price is pulling back to a zone, say for instance, and it's staying below this 50 period SMA. Then as long as price is staying below that, that 50 period SMA and it's tapping into the bigger, the most important thing is pulling back to an area of supply. I'm getting that rejection. Again, break of a candle for the rejection or seeing some form of failure or rejection at that zone. And we are below the 50 period SMA. Yeah, I mean, that would, kind of give me, I guess we could say more confirmation, but just kind of guide me along, me, I wouldn't be taking trades just like, oh, price pulls back on every pullback to a level and then it rejects that level. And as long as it's below, an EMA or SMA, am I going, going short? Or if it's above it, price pulls back, price is moving to the upside, and price is above an EMA or SMA and is pulling back to the EMA or SMA, in this case here, the simple moving average, then, I go long. I don't trade. That's why I don't trade moving average, that tactic or strategy of just pullbacks to a moving average and go short or go long. To me, you gotta be more. You gotta think more logical, be a little bit more complex in your thinking, and devise a strategy that just makes sense in studying price movement and understanding behind closed doors what's actually taking place. I mean, there's a certain routine, there's a certain pattern or way that the market actually moves, and you got to understand what the goal is that they're trying to achieve in every move in the market. Okay. When you see these ebbs and flows of price breaking and making higher highs to the upside or lower lows and lower highs to the downside and breaking through areas of structure, you got to understand what's going on there, okay? So I think that just trading based around moving averages, using that as a tactic, it's kind of a roll of a dice in a sense. Price pull back to the SMA, the moving average, it's rejecting and bouncing off of it, I'm going long, or I'm going short. Don't do that. You got to have more of a smarter strategy in play or in place to be able to make money in this business. Okay, that's just the thing. Now, again, he's a support and resistance style trader, and to me, it just makes sense to wait for price to come back, like I said, to those supply and demand zones, because if I'm a trader and I see moves like this to the upside where price is aggressive to the upside, a lot of buying, this is price pulls right back to this area here. This would be, support again. But the move started here. Would I want to take my trade on a pullback halfway through the move of this leg here where aggressive buying was, or wait for price to come back to the area where the aggressive buying took place at and started? Just think about it. It's logical to wait for price to come back to this area. A lot of times it will not 100%. I will say price will pull back to either support in this case or resistance, pulling back to resistance as well, and just keep moving in, direction. Meaning price moved up here, pull back to support, breaks higher without even attempting to come down here. Okay, well, it hasn't quite come back to that area yet, to the demand or supply zone. It may not. Sometimes price does that. But to me, it's like it makes sense to wait, to be patient, to get into the trades where the move started at versus halfway through a leg. Okay, I just don't. You're trading within the 50% of an area. Okay, so I was trying to explain to him why not wait for price just to come back to the supply or demand zone. Now he understands the way I trade. I'm going to kind of clean this up a little bit. But he understands the way I trade. I know there's a tool or a way to be able to erase this all. If someone knows how to erase, I say drawings on a chart, a NinjaTrader chart, I think that's one thing or one feature that I'm, when it comes to maybe the hotkeys or something like that, that I'm not privy of yet. I've been using NinjaTrader for years. I know there's a tool to be able, a way to be able to delete, drawings from your chart, whatever the case is, once you try to draw something. But anyways, again, I'm gonna go back and try to make this just a little bit cleaner here. Price pull back, breaks higher, pulls back, breaks higher, pulls back. So we got price pulling back to what? Support. Okay? It just makes sense to take price when it comes back here. Price moves back, aggressive buying right here. If I take my trade right here, I'm at the 50% area of this leg right here. No, I want to get in. Better pricing is down here. Better pricing is down here. And if for some reason, let's see if we can, I don't know if it's gonna let me do this or not. I don't think there is I don't see a drawing to for that. Let's see. Let's just use the arrow line here. But let's just say, for example, this was the SMA or the moving average right here. Okay. All right. Price pulls back to support right here. Yeah, it comes back towards the SMA at support, okay? But we're halfway in this move here. I really take price when it comes back to this area here, okay? Look for the rejection, breaks back above an SMA, and then go long, It just makes sense, more logical sense for me, and it just works out with my strategy, okay? Same thing if price is moving to the downside and the SMA or moving average is above it, and price pulls back to a key area of supply, and price stays below the moving average, I get the rejection, I'm going short, right? Same thing. So we'll look at a few examples here. So a lot of you may be asking, like, how much money did he actually lose? It was a significant amount of money. Me personally, I don't know 100% what or why, because he's been profitable the last few years. Just maybe he just had a bad month or bad week or two. But he does, like I said, understand supply and demand in the style and way of how I actually trade. To me, it just makes, I don't know, you can't tell a person how to trade and how to use their strategy but the thing is, once you find something that works for you, stick with it. But I want to show a couple of examples, like I just said. We'll look at yesterday's price action, and we'll look. I have this right here is the 50 SMA. All right, I'm not going to use it in a reference, in a sense of just price pulls back when it makes starts breaking structure to the downside. As long as it pulls back like it did, like right here, push down, pull back, push down, pull back. Taps into, a little swing to the downside here. Price pulls back to the SMA, get a rejection, I'm going short. Does it work out here? Yeah, it does work out here. A lot of traders trade that way. They say that, as long as price stays below the moving average or EMA, whatever the case is, pulls back to a key area or key zone, key level, whatever, look for the rejection and go short. Okay, that's your style of trading, that's fine. But I need a little bit more meat on the bone, meaning a little bit more, something that, a little bit more confirmation, I would say. And the way I trade, the strategy I use works for me. Now, can I couple or use, an indicator like this to be able to kind of provide some guidance to me in trading? I mean, it wouldn't be so much more guidance to me, for me in a sense. But, I mean, it would make sense. I mean, okay, yeah, price is staying underneath something or above something, pulling back to a key zone. Your strategy works out, Could I use it like a means of a tertiary confirmation or indicator? Yeah, sure you could. But for me, I'm pure price action trader. I trade just using the volume profile, in reference to, I use the volume profile kind of like my GPS in a sense. I always say buy the lows and buy the highs. That means I'm buying the lower end of a high volume area and selling the lower end of selling the upper end of above a high volume area But we'll look at a few examples right here in reference to just kind of seeing if, as price was moving to the downside, if he had waited to price to pull back. My friend, once again, pulled back to some key areas of demand. And this is what price moving to the downside, making lower lows and lower highs. Again, if price pulled back to some key areas of supply, in this case here, and it being below the SMA, would he be golden to take those trades? So let's see. All right, so I showed this zone yesterday. Here's a zone right here. This is a supply zone right here. And I think I got a question about that yesterday in this area right here. One of the members asked about why I took that trade there. All right, so simple moving average. It's a 50 SMA. Okay, so price is moving to the downside, making lower lows and lower highs. It breaks back to the upside, takes out this level of the structure, this area structure here. Okay, it moves up to the upside, then it turns back around. And what does it do? It breaks structure back down to the downside, okay? All right, downside takes out this area right here, takes out this low here. Then it turns back around and starts retracing back. Now, there is an area of supply resting right here, as well as there's an area of supply resting right here, okay? I don't believe price yesterday tapped back into that zone right there, the supply zone here. But when it tapped back into this area here, look in reference to the SMA, the 50 SMA, the moving average there. When it pulled back right there, we pulled back to demand, not demand, supply right there. So, I mean, if you want to, you can add it to your chart, you know, as maybe a tool to help give you more confirmation. Okay, price pulls back, doesn't break above it, as long as it stays below it, and it's rejecting at the area of supply where there's aggressive selling at. So you got a lot, you know, you got another means of confirmation there. Go short, right? Okay, so we're looking at another example. So it works out right there, okay? All right, price pushes to the downside, okay? What does it do? As it pushes to the downside here, you got a area of supply right here, okay? Aggressive selling to the downside, pulls back. Again, it's not touching the SMA, meaning butting up to it, but it's below it. But I'm taking my trade because it's rejection here. At the supply zone here, where there's aggressive selling, and we got a little M formation. Everybody knows M's at the top means rotation. Rotation means, for me, failure, rejection to want to push higher. You get the rejection, candle break to the downside, and take a shot back down towards the lows, okay? And it does come back and take this area out, as you can see here, all right? Moving on to the next trade. So right now we are staying below that 50-period moving average. That's that SMA, okay? All right, so we'll look at it from the standpoint, maybe, you know, taking a long entry, okay, off an area of demand. There's a demand area resting right here. I'll show it to you. I'll show you some more, but I'm just kind of quickly just going through this. Right here, okay. Again, aggressive buying, pulls back. SMA is below price right now. So we get a pullback. Price pulls back to the area of demand. You get the break of the candle to the upside. You take your shot and go long, right? Again, SMA, the simple moving average is below price right here. So that's what I was trying to explain to him. Maybe if he had, you know, if you wait the price to pull back to those areas where there's aggressive buying, aggressive selling, and it's been, meaning that it's untested. You guys know when I say untested, those have been following the channel, meaning there's a gap. There was aggressive buying right here. Price comes back. It doesn't tap into it right here quite yet until it pulls back a little lower. But once it taps into that zone, this is the first attempt on the move to the upside with those aggressive buying, you know, before it pulled back. This is the first attempt right here. You know, it didn't break higher and immediately come back. It actually broke higher, pulled back, and made another high here before pulling back to the zone right here. So it's untested, you know, gap fill. It's going to come back to me. It's going to be some means, definitely some means of rejection. So I take my shot and go long. Again, the SMA is below. Again, you could use it as another means of confirmation, you know, if you like, whatever the case is. But all I'm trying to say is basically that, you know, yes, I feel bad that he lost money. I'm not sure if it's because of the strategy or him simply just trading based off of looking for entries strictly off of supply and support and resistance. But to me, I don't know. It's just supply and demand is just more powerful, more impactful way of trading, waiting for those and noticing and identifying those key areas where prices moving quick to the upside or moving quick to the downside with a lot of aggressive force and, you know, a lot of selling, a lot of buying, and you wait for price to come back to those areas. And again, if you're using a moving average and price is either above or below those areas, price goes back to the supply area, and the moving average is sitting above, taps into it or stays below. As long as price stays below, take your shot going long. Short, and then vice versa on the other end. So flipping things around. But that's all I wanted to show you today. And we had a long discussion, and hopefully he gets back into his routine and mojo of things. And I believe he's going to try to even kind of heed to the advice and take a look at supply and demand and see if maybe for him it will aid him along in his trading. He understands the way I trade, and he sees that I'm very profitable in doing so. So hopefully he's able to pick up on and knows what I'm trying to say. Maybe flip it around a little bit. Maybe wait a little longer for price to come back and just not be pushed up here, pull back, and try and take an entry right here, this area here. Wait for it to come back a little lower. This is where the move started, right? Wait for it to come back lower. Look for your rejection at this area. Yes. If you're using moving averages, did it come back to your moving averages? Moving average, yes. Did it stay above the moving average? Yes. Did it tap into your zone? Yes. So what's the last step? Just look for the confirmation to go long, the rejection. That's it. But that's all I have for you guys today in the video. I appreciate it. We're going into the weekend now. As I mentioned, I probably won't be doing too much trading next week because we're moving into the holiday. If you're interested in joining our Discord, we have a community well over 700 members now strong. We have a couple channels there. One, the general chat channel, to where we talk or to where you can come in and discuss and ask questions pertaining to anything surrounding futures trading. If you're interested in joining the trading floor, that's where we as traders come together as the market is open, share our interests as far as our levels and zones, trade entries. A lot of people are kind of picking up and understanding and learning information from the trading floor as well, pertaining to supply and demand. But not everybody trades supply and demand on there. If you got a strategy and it actually works, that doesn't mean you can't take part in our trading floor session. Come in, okay? You don't have to trade supply and demand. Whatever works for you, then just come and join us. You can share your information or share your trades or share your zones or levels of interest on the trading floor just as well. But outside of that, if you're interested in, I'm gonna say this. Let me show the channel right quick, the Discord channel. I'm sorry, guys, so you know what I'm talking about. Okay, see, we got a few traders or active this morning already that are been sharing the trades, been sharing the trade entries. I get on here, I share my entries as well, and engage in the community as well. So if you're interested in joining that, find the link to the Discord down in the description portion of the video below. Invite yourself in. It's free of charge. Also, there are 2-tier membership programs or tiers you can sign up for, one or the other, depending if which one you want to choose. Basically, and support the channel. It's through the YouTube channel page. If you click on the join button, you can get more information on the YouTube channel page or the join button on any video on the channel. Basically, it's just a way to support the channel. But if most people who are signed up or have signed up for the Elite Channel Membership Program, that's because they love the perk or reward of receiving the trade breakdowns where I go in depth and detail. Basically, you're getting that kind of inside mindset view or understanding of why I took the trades. As well, just a couple of days ago, I posted my, video playlist that kind of aids traders and understanding, supply and demand. I walk you through in many videos, trade entries. I walk you through step by step in the way I trade using, especially for a beginner, the paired chart approach, meaning taking two charts, marking your zone off one chart, waiting for price to pull back to it, go to a lower scale chart, look for the mirrored or the same setup, and then once that same thing replicates itself, look for your trade entry. So there's a particular strategy that I use, and I highly recommend to beginner traders or new traders if you're looking to, understanding more about that. Then I highly recommend you taking part and maybe joining the Elite Membership Program or tier. It's all for the price of a cup of coffee. You're talking about $6.99 a month, and you're getting so much value. First of all, you get the trade breakdowns. Secondly, you get the video playlist, which is a hand-selected list of videos that I've hand-chosen that should definitely aid you in understanding or grasping the information and the way I actually trade. As well as you get other perks. You get the shout-outs. You get the the badges, the emojis, the priority comment or reply to comments as well. So, each tier has its reward levels. So outside of that, that's all I have for you guys today. But again, if you're interested in joining and becoming an elite member, just find the link, the join link or join button on the homepage or on any video on the channel. I'm going to wrap it up here. Everyone, have a safe weekend. If you're trading, please be safe in the markets. I believe they call this Witching Friday or Witching due to expiration today. So I'm going to jump and leave here. I'm not going to keep rambling on. Appreciate everyone who's tuned in. If you're a first-time viewer, please take the time to go ahead and subscribe to the channel. Click on the red button down below. Make sure to click the bell, turn your post notifications on, and please make sure to drop a like on the video. Take care. See you in the next one.